Today we have discussed about the private equity capital call. We have discussed here the capital call, how many type of capital call. Then we can explain the journal entry, the capital call. Then we can explain the impact of the journal entry, the where is the balance sheet and P&L. Then we can find out the conclusion how the capital call needed. Everybody know in private equity industry, the people is mostly they have using some word the capital call, capital call, capital call. If you see the name is the capital call, this capital call, if you see one is the capital, another is the call. If you combine that two words, you can find out the capital call. Capital means some money, some equity, whatever you have think of, this is my capital. Call means someone call you, some thing or some point or something what they call you means call. If you combine that two things, it is a capital call. Before you go to the theoretical, the capital call, I just give you some example. I can retrace something before the capital call. For example, one fund, ABC LLP one fund, private equity fund. Now, total commitment is the 60 million. ABC LLP one fund, the total commitment they have decided is the 60 million. Now, they find out in the market three investors. One is X, one is Y, one is Z. Now X investor, their commitment, they sign the LPA, their investment in particular ABC fund in the 10 million. Y, they have signed the LPA, they have investment in the 20 million. Z also agree that the same their investment in the fund in the 30 million. Totally the 60 million in the fund commitment also 60 million. Now the three partners agree they have paid some amount ABC LLP fund in the 60 million. Now the fund is generated. Now the fund needs some money after sign up all the LPA, after sign up all the legal document. Now you think about the fund call, this amount is not one time. Whenever the fund needs the money, then the fund call to the partner in that time only. Now everybody have some question in your mind, why fund is not calling the money in 16 million in one time? High fund is calling the money in the different stage. You know that the private equity fund, why the fund calling the money. First we will discuss about the how many type purpose, how many type of capital call the ABC Fund Limited needed. If you see, there are mainly four type of capital call when fund need the money. First is the investment. If the ABC LLP fund need or find out some good opportunity, they need some money to the LP investment somewhere. Now, if the fund needs some expenses, the expenses including the admin fees, organization cost, anything what the fund needs of the expenses. They need some expenses, then the fund need to call into some capital call to LP. Now, the managing fees also. If the fund needs management fees every quarter, they call to the LLP. Then some another point, working capital. Also the fund needs some working capital, then they call to money to LP. Maybe different type of other thing also, but mainly basically the fund need to money to the four type. One is the investment. If the fund need to find out some good opportunity, they call to the LP. Then the fund, if the fund needs some expenses, they call to the LP. If the fund need to management fees, then they call to the LP, and some working capital they need to call to the LP. Now, if the fund in the starting beginning of the fund not find out any good opportunity, maybe they call for the money to expenses. Maybe also find out some good opportunity, they might call for the investment, working capital, whatever the fund is decided. Now you can discuss about here capital call. Now, for example, the fund need good opportunity. For example, here, for example, 2 million, and the expenses they need 0.5 million, management fees, for example, 0.5 million. Now there are no capital call. Now the fund need 3 million to investment somewhere to 2 million, 0.5 as a expenses and 0.5 as a management fees. Now, what the fund need to be do? If I call you the LP, I need some money, then you can give us? No, nobody is pay the money. It is some the documentation they have. This documentation, what is the process they follow, this is the capital call. Here the capital call means the GP call to LP through some documentation. This is means the capital call. Now you can see the capital call, two things is very important here. What is the two things? One is the notice date, one is the due date. Normally scenario private equity, whenever they send the notice, the 10 business day, 9 business day, 12 business day, as per the LP they mention the fund should be due, the LP should be paid the money to the fund. Now for example, if you see the 3 million amount, the fund need, one is 2 million is investment, one is the expenses, one for the management fees. Now 27 May, the fund need to send the notice to LP, and the, for example, due date is the 7 June. The two dates are decided in the GP. The fund date should be 27 May, for example. Now the due date should be the 7 June. In this case, they prepare the notice. What is the notice they have? Notice is not. Notice is basically this is for example they put the due date, correct? LP name, LP address. Now they mention, okay, this is as per the LP, this is the commitment we have, and we have need to some good opportunity, investment somewhere, your commitment percentage 2% like that. Now we need to pay the money. Then the notice is mentioned in the below side in the total contribution, ownership percentage, the bank detail, whatever they have. That type of format they have. Different type of format they are using the capital call. It is depend upon the GP what format they have used. Some capital call they have to the 1 page, some capital call they have used to the 3 or 4 pages, some capital call also if you go to the starting of the private equity, beginning the start they have using only the mail, they have mentioned the mail, okay, this is the amount we need to pay, like that. Now the scenario is changed, they should be send out the capital call notice. This is the capital call notice basically. Yeah. Now if they call the money, for example 3 million, you can see what is the journal entry we need to pass in your book. You can first you think about the accounting entry. You should have book in your system as per the due date, not as per the notice date. Okay, now the due date is 7 June. You can book one entry in the 7 June your system. Receivable for investor account debited, contribution amount should be credited. Correct. In this case, you can use contribution whenever you call 2 million. And in this case, you can still receivable investor to expenses and management fees, whatever you have. Now, if a 3 million they have calling, you can pass one journal entry here, receivable from investor debit, contribution credit, expenses credit, management should be credit. Now you can pass one journal entry here. I can give you some example once I done the journal entry. Why the main important necessary important date is very necessary. Why you not book? Why you are not booking in the entry in our system the as per notice date? Why you need to book in the only in the due date? Now you can book one entry in the 7th June. Receivable from investor debit, contribution amount should be credit, expenses amount should be credit, management amount should be credit. Now, once you send the notice, GP should be paid this amount before the 7th June or on the 7th June. Now, for example, GP now starting the payment in the 7th June. Now, whatever to pass the entry here, bank account should be debited and receivable from investor should be credited. Simple entry. Once you pass this entry, you can book here. Once you receive the amount, which date you receive the amount, this date you can mention here, and bank should be credited and receivable from investor should be debited. Now receivable for investor, debit credit you can just cross, you can zero. Now the main entry should be bank account should be debited, contribution amount should be credited. Now this entry you can pass. Now I can explain why the date is important. Why the ABC, LLP, fund they have recorded in this book only for the due date, not the notice date. For example, I give you one small example. Everybody you know start the mutual fund in India. Correct. Now you can start one mutual fund as the SIP through. Today I have go to one mutual fund and you are instructed that mutual fund I need to start my mutual fund SIP through next month onwards. For next month of 10 every month 10 you can deduct my amount in my account. Now if you think the mutual fund have recorded this amount their book whenever I instructed, or the mutual fund is recorded that amount whenever my due date, when I instructed my bank or whenever I instructed the mutual fund, you can deduct my amount 10 of every month. And you can see if you already contribute some under mutual fund, if you see the amount deducted in the same of the every month in the 10, and they have allocated unit in the only for the this day only, not whenever to our commitment. And that's why I can explain you again and again. This date is very important whenever recorded book. And second thing I can explain you why this date is very important. For example, if you book this date, if you not book this due date, if you book the notice date here in your system, your book, whenever you calculate the preferred return, whenever calculate the carry, whenever calculate the sub closing, that you can find out the issue, because whenever the sub clause you start, the sub clause always take the due date, not in the notice date. Whenever calculate the preferred return always take the due date, not on the notice date. And this is very important. You are recorded in your book as per the due date, not in the notice date. Now, why notice date is very important? It is very important due to the preferred return. Whenever you calculate the preferred return, they have take only the due date, not in the notice date. Whenever the sub clauses happen, now they have taken, whenever the sub clauses happen, you need to calculate the interest. Then the interest they have consideration only as per the due date, not in the notice date. That's why the date should be very important here. You can, whenever you record it in the amount in your the book of account. Now you can see what is the impact you have. Now once we send the notice, you can pass the entry in your book receivable from investor debit to contribution amount credit, expenses amount credit, management fees amount credit. Now you can see what is the impact you have. Once you book the entry, for example, you book the entry, this amount contribution, whatever the expenses, whatever the management fees, the all amount is combined to hit here in the contribution side, in the balance sheet, in the partner contribution one is per account. Let me discuss about the balance. In the balance sheet, we have designed with the three stages. One is the asset, one is the liability, one is the partner capital. Correct? Now, once you book the entry, receivable for investment debit, contribution amount credit, expenses amount credit, management have commit, this whole 3 million amount should be hit here LP contribution. Either LP pay or not pay, this is not matter. Once you book the entry, this should be hit here, the partner contribution line in the below, you can see here 3 million here, you can hit here. Now, what is the receivable amount should be? Here you can see asset side in the receivable from investor, you can see they have showing in the 3 million. Here, once you book the entry, one part is showing in the partner contribution line, LP contribution 3 million. Second part, you can see here, they have showing here the asset side receivable from investor 3 million. There are no impact in the profit and loss in the contribution amount. It is very clear, you can see there are no impact in the profit and loss account in the contribution amount. Once you receive the amount in your bank, now your bank should be increasing 3 million, contribution should be here 0 because you have now received the amount of your bank. There are no change in your LP contribution. The final entry, once you receive all the amount of your bank amount in asset side should be 3 million. No liability in this case, for example, there are no liability. Now in the partner capital line, you can see the LP contribution is 3 million. For example, this day there are no if there are no P&L, you can see here asset is 3 million, total asset is 3 million. For example, liability is 0. Now your partner capital, you have shown the 3 million. Now you can see your balance sheet correct or not correct. You can, there are some formula, asset minus liability is equal to partner capital. Okay, if you see asset minus liability equal to the partner capital, this should be the balance sheet is tie up, all are zero. Now you see asset, how many asset you have? You have a asset, for example, is 3 million. There are no liability is equal to 3 million is total asset minus liability. Now partner capital how much? 3 million is equal to 0. Now you can find out your balance sheet is the tally and your balance sheet is correct here. For example, in some scenario, if there are some expenses here, for example, in the P&L some expenses here, for example, 10k, then what is the impact here? In 10k, as you see, either they have payout or they have not payout. If they have not payout, they have accrue it, you can see your liability side, that part, expenses payable 10k, and in partners capital P&L rebalancing in 10k. Clear? Now you can see here 2.9 million as a total partner capital. Here you can see 3 million minus liability 2.9 million. So this is the P&L part. If they have payout something, then here you can reduce your bank. Bank is 2.9 million. There are no partner capital here, no liability. However, you can already pay here. Then total asset minus liability 2.9 million. Now you can see the P&L rebalancing. Then you can see here only they have just up and down here and there. Nothing in any difficult to face here. Now you can see the partner capital, why they call the partner is here. Very important here in the only due date and notice date. Now we can discuss about the equity call. What is the capital call you have? Equity capital call, basically a capital call means asking investor in their fund to send the money they have promised to contribution. A capital call involve more than just a wire transfer. And now the second meaning is that the capital call, a capital call also known as a drawdown, it is the act of collecting funds from limited partner whenever the fund need the money. When an investor buy into the private equity fund, the firm make an agreement with the investor that the fund will be available when firm request the money. Also, we have discussed about the capital call. They have need basically 4 type of capital call: investment, expenses, management, working capital. Maybe there are other part also, but basically the main important thing is the capital call. They need to the investment, expenses, and management fees. We have also covered the journal entry here. We also covered the where the impact in the balance sheet, where the impact in P&L. If you guys any question like that, please message me. We will also discuss about the detail wise in this part. Thank you so much.